Hey there, good afternoon, traders. Good afternoon. My name is Raul Rivera. I am the founder of www.themarketprofile.com. Today is Tuesday, August 22nd, 2017. Let's get started with today's trading in the markets. And unfortunately, I mean, this has snowballed into something bigger than I thought. Unfortunately, this is my fourth straight losing day. I haven't had a streak this bad in a long time. Something's off in my trading, but I mean that's the bad news. The good news is I also traded profitably on another set of strategies in both crude oil and gold. And I think the time has come to just deleverage a little bit here in the S&P 500. I don't think if I keep going like this every single day, I'm gonna end up bankrupt thanks to the S&P 500. Seems like I've been on the wrong side of the trade for a little bit too long now, and I've had to start following the trend because one day they really want to sell it hard, and then the next they really just want to buy it and keep it on a trend for the rest of the day. We had no news today to speak of. Maybe a couple of things, but nothing too major in the economic news area. Tomorrow we have, I believe it's either existing home sales or new home sales. So that'll come in around 10 a.m. in the morning. That's going to be a good factor in deciding, where the market's going to go from here. Housing data has been pretty good lately, and I think that trend continues. As for the S&P 500, it'll probably continue to go higher. It just, the buy the dip crew is still in, that's still the rule of law, right? Buy the dip, BTFD. And, I keep getting caught in these trends because these buy the dip people just continue to buy it every single dip nonstop. Every time the VIX spikes, it gets sold and just hammered pretty much. So let's take a look here. Here in the S&P 500, I had two trades to speak of really. As you can see, we have pretty much a little bit of a top-heavy P followed by another P. We could even argue that if I split it here, we have another P-shaped distribution. In fact, many legs to this rally here in the S&P 500. If we take a look at the hybrid view, it's just been non-stop. And it's not just the buy the dip crew, which is usually mostly retail trades plus a little bit of institutions, but the institutions were heavily involved here ever since the open, all the way up to 3 o'clock, okay? All the way up to 2:30. All the way up to 2:30, all they were doing was just buying. We can see here, this is a 30-minute bar. And we can see just on the cumulative tick volume, this is an indicator I use to track volume flow. And we can manipulate it in many ways. And in this way, I'm tracking trades of 50 contracts or larger. 50 contracts to 2,000 contract trades. Now, who has the means and the power and the ability to just, swing and sling 50 contract trades again and again and again, right? It's not me. It's certainly not many retail traders. It's the institutions, right? Everybody has these thoughts that these institutions, all they do is just buy stocks and hold them forever, right? That's not necessarily true. There are many departments that are just focused on day trading. Proprietary firms, proprietary trading firms, they're all mostly day traders. I don't think many of those proprietary traders are swing traders. I'm sure some of their portfolio is based on swing trading, but a lot of it is also day trading. So these guys have a lot of leverage, right? Their firms, give them a lot of leverage, the tools that they need to succeed, and trading secrets and strategies that the firm has used to trade. And a lot of times these guys are always trading again and again and again, maybe taking 3 points, 4 points, sometimes even 5 points on any given trade on anything greater than 50 lots. So this is why I keep a track on these guys, right? 50 contracts or greater, that's really what I want to pay attention to. That's, you know, big money day trading, right? It's big money day trading. So we can see here, we're tracking them rather than on a cumulative view, we're actually looking at it here on a non-cumulative view, okay? Cumulative view is pretty much something like, let's see, like this, for example. So let me just switch over to gold real quick. And here's a cumulative view, right? As you can see, you know, here's zero, right? If we draw a zero across the chart here in gold, and cumulative simply means an accumulation, right? We accumulate the data and continue to add it or subtract it depending on what the data comes in at. Here we can see gold, you know, buyers were in control, right? It continued moving higher from zero. Non-cumulative resets on a bar by bar basis. It doesn't accumulate. It's simply just every single bar. Here are the details from the 50 to 2,000 lot trader. So here we can see that they were buying, and during all of this buying, we could see what prices were doing, right? It wasn't until late in the day that they finally started taking some profits here. We see negative volume or a negative delta, pretty much. More sellers than buyers of the 50 to 2,000 lot trader at these highs, as pretty much the market continued to move higher, right? So it's not that they're short selling at the highs. I mean, we can see it. What the heck they were doing all day? They were buying, and then they started taking profits here towards the end of the day. So, you know, today just a really rough day for me and anybody who was really looking to short or keep the market in a range, right? I perform better on range type of days than trending days like these. But of course, you know, these trending days, apparently for the month of August, it looks like we're making up for the entire year, because we've had more trend days in August than in July, June, May. Just keep going backwards in time. We've had many more trend days than in all of the previous months combined. And, you know, that's partly why, you know, my P&L has suffered quite a blow this month, right? I'm down this month. There's, you know, unless I get a miracle tomorrow and I'm able to short the highs and you know, sell it down to 2,400 on, you know, 10 to 15 contracts, I already know I'm going to be in a red day, right? In a red month. So it's going to be my first red month since December. So that's pretty much a bummer, but this one's going to be worse than December, just simply because December, you know, I took a blow, but I was able to recover. So, I mean, I took a hit of about $13,000 last December, but I managed to recover $10,000 by the end of the year. You know, still down about $3,000 for that month. This month, so far, I'm actually down. I'm getting close to 20 grand, and that's not looking so good, right? You know, this is my living, and you know, I'm not performing to the best of my abilities this month so far, but that's the bad news. The good news is I've been going back to some of my old day trading strategies, some of my really active day trading strategies, and you know, I added a few twists to it, and came out pretty good. And but first, the trades here in the S&P, before I talk about that. 2440 to 2442, that was the area I was looking to short. I did short 10 contracts there, got out at 2444 for 3 points. One of the things I told myself is I'm not adding to my positions anymore. I'm either gonna get stopped out and then try again on the short. So here I got stopped out. I tried again here on the short. You know, at best it probably provided 1 point of profit before it turned again on me here. So this one, another loser for about 4 points. So I took a 3-point loser and a 4-point loser on 10 contracts. So you know, really what it came out to was close to $3,500 in losses here. But as you can see, my P&L today, I only lost, um, just a few, just a couple grand plus a little bit more. And it was because of the trend following strategy. So I'm gonna go ahead, fall back a little bit, deleverage on a lot of these market profile trades, and start focusing a little more on the trend following trades. So here in crude, I'm going to talk about a little bit in the market profile. I'm also going to show you some of the trades I took using the trend following strategy. So here, first trade of the day was 47.37, one contract, absolute low of the day. We have an inside day here. The idea was to get long just below the low of the day, get short just above the high of the day. I caught the absolute low by literally maybe one or two ticks, and it kind of sucks because you catch the low of the day and you see it after the fact. So you don't, that's why hindsight trading and real-time trading are so different. Hindsight, everybody's a genius. Everybody, is a great trader. Real time is when you really shine and or fall. 47.37, perfect bottom, caught it. Okay, I'm only saying this in hindsight now. Would have been a fantastic trade all the way up to the highs. Now, I took about a 5 tick profit on this trade. Okay, I took 5 ticks profit on this trade. Why? Looking at the cumulative tick volume, I'm looking at institutional traders of 20 contracts and greater here in crude oil. 20 contracts and greater. Let me switch over to hybrid view. And here you can see the low of the day was exactly 36. So I was 1 tick above the absolute low of the day. Okay. So what am I seeing? Right? So I'm short on that contract, on that bar there. And all I'm seeing is just absolute selling from the 20 lots and greater. And I'm just like, oh my God, here we go again. I'm long the market and these guys are selling. That's what happened to me yesterday and even the day before. These guys have been predicting the move rather well. And, once you see this big dip here of negative 1,000 on the cumulative tick here, it becomes a little bit scary. It's like, whoa, I'm long now. I need to get out of this position. So I got out for 7 ticks. Lo and behold, as soon as I get out, the market just rips to the upside. I was able to take a couple of day trades inside this push to the upside, and I'm going to show you those right now. Looks like the API just came out here. It is 4:30 p.m. Eastern Time. The American Petroleum Institute is pretty much the same as the EIA or the Department of Energy, but their survey comes out at 4:30 p.m. every Tuesday, pretty much the day before the Department of Energy's numbers come out. Looks like there might be a build here in crude oil. We can see that the market is falling down on whatever the news is. So I want to show you the trend strategy here. So what I'm doing is I'm combining a few of our proprietary indicators. Number one is this breakout indicator. Pretty much, rather than us visually seeing pretty much a breakout or a bar breaking out above or below its previous bars, I show it here in a bit of a bar chart histogram type of look, and we can see breakouts to the upside, breakouts to the downside, and it also shows you, how much power really went into these breakouts. So that's the breakout indicator. Here we have a cumulative tick volume on a non-cumulative view. Okay, and I call it VIX or volatility because here I'm only looking for the 1 to 10 contract trades. I'm not looking for the big players, the 50 lots or greater. I'm looking for 1 to 10 contract trades. That's what happens the most. Those are the trades that occur the most, and that's where the volatility is. Okay, And then here I have an overall view. This would be one contracts to infinity, or pretty much the entire market. And we can see, above the zero line is more buyers than sellers. Below the zero line is more sellers than buyers. So took a couple trades here, and some of the members of the room actually followed in and did rather well with some of these trades. And here we can see my long trade. I'll show you my fill right there. Long one at 47.37, and I got out at 47.42. Little did I know prices were about to explode, but that's neither here or there. So on the way up, what I like to look for here is positive volume, right? More buyers than sellers. So I'm looking for long side trades. Next, I'm looking for prices to be above this moving average. And then number 3, looking for a breakout on positive volume, right? Looking for a breakout to the upside on positive volume. Here we had that. Got long 2 contracts at 48.03. Sold 1 contract at 48.13 and 1 at 48.15. Now this all happened so fast that I was not able to short inside the zone here, 48.15 to 25. I was looking to short a couple of contracts there, as you can see, entering that sell zone that we had here in on the profile. Okay. Right there is where we deemed we wanted to be short, 15 to 25. So you can see that actually happened to be the high of the day. Switching back here to the this chart, it all happened so fast, and I'm using a tick chart. I'm not using a 5-minute bar or anything like that. It's purely just a tick chart, and tick charts can open a bar and close a bar rather quickly sometimes. So I wasn't able to fully take advantage of the sale here, but 10, 12 ticks here on this single trade, working out pretty well. Here it took the first loss, 47.68. Bought it at 78, sold it at 68, so that's a loss of 10 ticks. So it kind of cancels this one out. And then I took my other trade here, 47.79, got out at 89. And to be honest, there were just multiple instances of just really good trades. Here, for example, we had another situation where we could have gotten long, based here on our indicators. Right in there, you can see that also traded higher. Since volume was positive, we weren't looking for any short side here. And then here, once again, a possibility of a long. We can see we have positive volume, positive down here, and also a breakout to the upside. That could have been another 10 ticks there. So this is what I'm going to be focusing on going forward, a little more than market profile trades. Just simply because I got to get the P&L back up to something more manageable of a loss. Right now my losses are a little bit too out of control. Taking a look at gold, multiple trades here. Switching over to profile view, we were looking to get long 86 to 80, 87.50 to 86, 87.50 to 86. And again, this is where it's important to always have orders out as you plan some of these trades out. It's always good to have orders out because during period C, this happened very quickly, right? The market sold off right here and then sold off again and very quickly traded higher. If we had waited for it to enter that area and then try to buy into the trade, it would have been a little bit too late. It would have been chasing the market up a little bit here. So always having an order in place before the market gets there saves you from chasing the market down. So trades down to this zone. I got long 1 contract there, 87.50. Didn't quite make it to my other contracts. Would have been nice. And it seems that as though every single one of my trades in gold, we get a 1 contract fill there. I got this day was different. I pretty much broke even, buying as the market went down. Here, 1 contract trade. The day before that, I had a 1 contract trade, And it seems as though those are the trades that actually work for me in gold, the one contract trades, and I'm making pretty decent money with one contract trades. Here I took on that one contract about 3.5 points. 5 points was about the high of that equity curve. And I also want to show you I took two really solid trades with the trend following strategy. Here we can see my first fill right at the bottom. I always try to be as transparent as possible. There's my first fill, 87.50, and here's where I took the other trades. So the first one right here at 90.60, that was on this bar right here, and actually no, it was right there on this bar. We had a breakout, positive volume, and the idea was to get long. So a couple of us got long there. 1291.60, we sold it. That's 10 ticks on two contracts, comes out to $200. And then this one, with this strategy, we always risk 1-to-1 or 2-to-1, right? That's the way to trade it, right? 1-to-1, 2-to-1. So here, 1-to-1 was 10 tick winner or 10 tick lose. That way we can minimize our losers and try to maximize our winners, though our winners will be equal to our losers. And in this trade, this next one, I got long again, 91.5, again on a breakout, positive volume. I got long again. This time I did 1.5-to-1. So risking 10 ticks to make 15, or risking $200 to make 300. And here you can see 91.5, 93 was my fill on two contracts right there at the highs. And then here we can see a sell of 1291. This is from the original long right here, so it took 3.5 points on that one. So here in gold, pretty much 350, about $600+ on just 3 simple trades, right? And not using a lot of leverage either. So this is what I need to be doing now. Putting a lot of leverage on market profile trades has, proven for a 4th day in a row that it's not working out right now. So I need to deleverage a little bit and then go back to trading it just a little bit smaller and focusing on this trend following strategy, because that's what we're doing here. We're following a trend and taking a couple of points maybe at a time, 1 to 2 points maybe at a time, and at the end of the day, just a few trades will add up. Okay, looking at the 30-year, looks like towards the end of the day we entered the long zone here in green and red. We had an inside day for most of the part. Overall, really boring day of trading here in the 30-year. I don't want to take up too much time. In the NASDAQ and the Dow, the market's much like the S&P 500. They just continue to the upside like crazy. Yeah, I mean, that's pretty much the trading for today. Like I said, I'm just going to roll back on the leverage on market profile trades and focus on trading the trend following strategy. That seems to be what's working right now, at least for me. And obviously for a couple of us in the room, we took a few trades together on the trend following strategy. Alrighty guys, if you would like to know more, please visit us at www.themarketprofile.com and claim your 14-day free trial of the live trading room, where you can watch me trade all of these strategies live, real time, and you could also see me manage these trades all real time, and also ask me questions on trading, my strategies, and I also educate when things are a little bit slow. If you guys like this video, make sure you guys click like on Facebook and give me a comment. I will reply to anything, any questions you guys may have as soon as I can. Thank you guys for watching. I hope everybody has a great rest of your day, and I will see everybody back bright and early tomorrow. Thanks, guys.